Hi everyone, Simon here with another market update for you. So last week, S&P 500, it was an interesting week if you were watching it day to day. A fairly boring week if you just watched where it opened and closed from Friday to Friday. Looking at the big picture, S&P 500, again this is a chart of the SPY, the S&P 500 ETF, consolidating above this key 78.6% fib level that I've been highlighting, and you can see how previous resistance has become new support, and the fact that we're consolidating above this level does mean that the all-time high is our next target, and in my view will be taken out. Let's just zoom in on what happened last week for a moment. So if we look here, this was that was Friday. So that's where we closed on Friday. This was Monday. Market was a bit soft ahead of the two-day Fed meeting. Very quiet trade during the two-day Fed meeting. And then the market gapped open lower on Thursday. This is on the back of more trade war tariff talk. Rallied off its lows, had a really strong rally, and then followed through again on Friday. So pretty strong close to the week, and like I said, closed pretty close to where we closed the previous Friday. So if you looked at it from point to point, not a lot happened. But path of least resistance remains up, folks. And you know the trick here is not to try and second guess the market all the time. Just take what the market gives you, and what the market is giving us now is an uptrend. Let's have a quick look over at the Nasdaq, the triple Qs here. Again, new all-time high. It was hit just last week, and continuing. Yeah, we've had a bit of a pullback, but continuing strength here. I expect that new high will be taken out fairly soon. Going through the sectors, basic materials continues to look like one of the worst sectors. Still can't really consolidate above this 50% level. So, you know, if you're going to short any stocks in this market, material stocks might be one sector to have a look at. Financials are not looking particularly exciting either. Again, really struggling to consolidate above this 50% level. In fact, it's been acting as a pretty solid level of resistance. Industrials, they've at least cleared this 50% level, so they're looking more neutral. Not bullish until we can clear the 61.8% level, which again is proving as a pretty challenging resistance level, but looking slightly better than the other two sectors. Technology still looks really good to me. I'm not going to talk about Apple hitting $1 trillion in market cap. Well, I guess I just did. That's far less important really than what happened with Facebook last week. A lot of people were worried that maybe the whole tech story was over with what happened with Facebook. This chart is telling me otherwise. Yes, we've had a pullback, but this uptrend still looks pretty strong. You've got to give that the benefit of the doubt. Consumer staples, this chart is starting to look interesting. I had thought that hitting this 50% fib level and the 200-day moving average, it was probably going to fall back down. But look at this, we broke through it on Friday in pretty positive fashion. So I think consumer staples is back on as a long trade. Keep an eye out for retail stocks. Real estate sector, I've been highlighting just what a lovely uptrend we've been seeing in this sector. This is a textbook beautiful uptrend where you've got higher highs and higher lows, but you've got that breadth in the price movement in and out. Looks like it's going to keep going higher. New all-time high on Friday, so we can redraw these fib levels now. Utility sector, it's cleared the 50% level. Really wants to clear this 61.8% level before this becomes our next target. But yeah, it's positive price action. I think that we'll probably break higher here. Healthcare sector is looking good. Okay, so healthcare has finally broken above this level, which means it's going to target its previous high at a minimum. So healthcare looking a lot better. And consumer discretionary still looking really good. Again, new all-time high was hit last week. We did have a bit of a pullback, but this is another strong uptrend, and I think that higher highs are in our future. Energy sector has been consolidating, but it has been consolidating at pretty high levels. We're well and truly above this 38.2% level, which is bullish. And look, the reason it's been consolidating is oil is just trading at the lower end of its recent trading range. So that's seeing the sector consolidate. The fact that oil has been consolidating sort of in the mid 60s rather than the mid 70s has helped out the Dow Transports though. So have a look at this. The Dow Transports have rallied back up to the 78.6 level. Again, if oil prices stay reasonably muted, that helps the airline stocks. And if the airline stocks can continue to rally, then we'll see the Dow Transports rally further. At least that's what I'm expecting at this point. Midcaps, they've been looking a little bit softer of late. They're consolidating it around their highs, but unlike the tech sector and unlike the Nasdaq, they haven't been able to make new highs. But this chart still looks pretty bullish. You've still got to give the uptrend the benefit of the doubt here. And the advanced decline line made a new all-time high on Friday, which again just reinforces that there is some breadth in the rally. It's not just the FANG stocks. Well, it's not even the FANG stocks, right? Because Facebook still doesn't look that great. Nothing really new to report in the bonds. This is the US long bond, still trading right in the middle of this range. Same with the TLT ETF, really just bound in the middle of this fairly broad trading range, so not a lot of action there. Gold, look, maybe it's starting to consolidate. I don't know. There are always gold bugs who are prepared to put a $5,000 price target on gold. I'm not going anywhere near it for a long trade until I see that trend turn around. I'm not interested in picking bottoms, folks, as you well know. So just a quick look at some of the stocks that I'm involved in at the moment. Google is trading pretty well. I got in back around here, and that's working out quite nicely. Still got a small position left there. Network appliances, this is another lovely uptrend, one that I've entered long just quite recently. New York Times is another one that looks like it's got a pretty good band of support around here. That one looks quite good to me. TJX, this is a retailer that's just broken out. I think that will continue higher. Visa, it is in the financial sector, but you can't argue with this uptrend. Again, I got in around here, and this is looking pretty good to me still. One I've got my eye on is XRT, which is the retail ETF. I think if this one can make new highs, that could really get going. I just think the retail sector is one that could be worth keeping an eye on at the moment. And on the short side, I'm having a look at Hertz. We've got a pretty good progression here of lower highs and lower lows. A bit of resistance here. It did close pretty strongly on Friday, but one that's just on my radar. Have a quick look at Facebook as well. I've got no position here and don't intend to have one. Still looking pretty friendless. Okay, we've had a bit of a bounce off the absolute lows, but there's a massive gap there. We've also got the 200-day moving average. I think it will probably struggle to really penetrate this gap. That is an enormous gap to try and fill. So Facebook still in the too hard basket for me at the moment. So there we have it, folks. This bull market may be old, but it's not dead yet. To me, the path of resistance still looks to be higher. I know there's not a ton of people saying that at the moment, but like I said earlier, don't second guess the market. Take what the market gives you. I hope it helps. I'll check back with you later. Good trading. Thank you.